What's going on, Dividend Chasers? Dividend Bloodhound here with another investing episode. Today's episode we're talking about should you buy RDSB, Shell, Royal Dutch Shell right now at their record lows. This is the lowest they have been since November 1995 when I was 4 years old. That is the last time the share price was as low as this. Is this a fantastic opportunity, or is it a dying breed and trying to catch a falling knife? I'm going to do my very best to answer this question on the other side of the intro. If this video does bring you some value today, it'd be absolutely fantastic if you could smash that like button. And if you're brand new to my channel, consider subscribing and hitting that notification bell as well, so you get notified of great content just like this, where I'm giving my opinion on some of the best stocks that are available in the FTSE 100 and the SP 500. That being said, I'll catch you on the flip side of the intro. See you there. Hey again guys, welcome into the video. So today I'm going to be doing my very best to explain why I'm still buying Royal Dutch Shell and averaging down my position. I have made the stock for me is approximately 30% down at the moment. And I bought some of my shares initially when pre-pandemic, pre-oil crisis, right when the share price was up at 20 to 25 pounds. And now I'm getting in, averaging down at £9 a share. I'm going to do my very best to explain why I still think Shell is an absolutely top quality investment for me and my portfolio. So I can't really make this video today without mentioning the 9,000 job losses announced by Royal Dutch Shell in the last couple of weeks or so, and my heart would go out to anybody that does lose their job due to these cuts. Hopefully they would be voluntary, but the business is making the difficult decisions it has to make, which is a good thing for me in order to survive, in order to streamline its business. Now that 9,000 job losses cuts £2.5 billion from their budget that they can use for other things in reinvestment, for example. Now they've also announced that they're pivoting, just like British Petroleum, BP, they're pivoting towards renewables and alternative energy sources and coming away from oil slowly but surely. The strategic goals of Shell is to gain competitive advantage in the energy sector, so not just being renowned now for being an oil company, but they want to transition into being an electricity supplier, and through an integrated amount of energy. So not just oil, they're looking at low carbon gas, they're looking at biofuels, wind power, solar power, all sorts of alternative energies that they can monetize properly and hopefully gain the sort of profit margin that oil would have gained once upon a time. I don't think oil's going anywhere anytime soon, I have to say that, and that is also why I'm back in Shell, because I know for a fact that oil is going to still be sticking around for at least the next 10 to 15 years as a minimum, which means the business will still have this significant revenue going forward. And yes, I agree with most people that I don't think we will ever see the sort of energy and oil use that we saw in 2019 pre-pandemic. But eventually the world is going to get back to cruise ships being at sea all the time, aircraft being in the sky all the time. At the moment, all the cruise ships, or most of the cruise ships in the world, are tied up alongside, not burning much fuel at all, and 50% of the world's aircraft are still grounded. Now if you add all of that up, that is a significant amount of oil not being used, and that isn't including the people whose cars are still at home, sat on the drive, not being used, etc. Again, another reason is the rip off the bandage approach used by Shell's executive and management to swing the axe on obviously the workforce there, but also the dividends. They're not afraid to lop 66% off the dividend and start again from scratch in order to preserve the balance sheet of the business and not get into significant debt just to keep shareholders happy. As an investor myself, I'm happy with the 3 to 5% yield that I'm getting on this stock. That still beats most, if not all, ISAs and bank accounts out there, and because I'm from the UK and you're not paying the dividend tax against it like you would from the US market, that is still a pretty decent return by anybody's book, and I'm perfectly satisfied with that. As a statement of intent, if we look back at Shell's history and you look into what they're doing in terms of transitioning to renewables, investing at least £2 billion a year in renewable energy, and that's going up. They acquired BG Gas a couple of years ago in a £53 billion deal in order to get hold of a gas sector and add that to its portfolio in terms of adding that energy mix to Shell's diversification essentially. So what they offer is now a huge gas low carbon option that way, and that is just the first step that Shell took into becoming this integrated energy company, which I am on about in this video. A lot of emphasis has been placed on recently the onset of electronic vehicles, EVs, coming into the world as a matter of urgency. Car manufacturers are going to be chucking them out left, right and centre over the next decade or two as we transition away from regular petrol powered vehicles. Now the thing is with this is all these cars have still got to get energy from somewhere. They have to plug into the grid to charge up, and that is going to add a significant, if you've got all the cars in the UK at the moment and plug them into the grid at the same time. I read recently an article on an engineering website that said if every car in the UK was suddenly to become electric overnight and they all plugged into the grid at the same time, the UK would need between 5 and 10 extra nuclear power stations to cope with that demand. So there is a huge amount of energy there that's going to be needed, and Shell is ideally placed, I believe, to obviously not supply it on its own because there are other companies out there, but ideally placed to take a significant portion of that market share for itself and generate significant revenue off that. It has to be said that I do believe in the long-term goals of Shell to become this integrated energy company. They are talking in their strategy about really streamlining their oil production segment of their business. So instead of just being an oil company trying to scrap oil from anywhere that it can in the world, I think they're really going to reduce down and focus on some key quality areas, such as where it's got its biggest wells and its best exploration and most efficient exploration, such as the North Sea, the Gulf of Mexico and Nigeria is where its biggest, most sustainable and profitable operations are. And yes, the world is going to reduce its need for oil, but the need for oil is never going to dry up completely. It is still going to need to be supplied, and if Shell can provide it at a profitable ratio, that means, or a streamlined, profitable, most efficient ratio, that means they're ideally placed to generate significant revenue and profit from that and use that to invest in other energy sectors at the same time, and obviously reward us shareholders for holding on tight during these times that we are suffering at the moment. Essentially the share price, obviously, as you can see, has been massively reduced down to £9, but I do believe that for people that have faith or want to buy in now and actually dig into the strategy of Shell over the next 10 or 20 years, I think we will be handsomely rewarded for our investment in the longer term. At the moment, as I already said, the dividend yield is between 3 and 5% depending on where you average down to, and if you've just bought in outright from now. The dividend is particularly well covered as well because of the quick action that Shell took to protect its revenue and protect its bottom line. The dividend is well covered at 1.4 times over, and it is still generating a significant amount of revenue. Just because we are in the middle of a pandemic doesn't mean that Shell isn't making any money at all. In the future, and I am talking a couple of years down the line here at least, I believe us investors will be handsomely rewarded for our faith in the company, and I believe that the share price will recover back to around a conservative 18 to £20 price, which is essentially double your money at the moment. Obviously you're going to have to be patient with the long term, but you will get rewarded with the dividend over that. I think because they've suspended share buybacks, that will stop the price going as high as it possibly could do, unless they announce that they're going to do that again. I genuinely believe that 18 or 20 pounds a share would be pretty good, and that would give you 100% return on your investment over the next 5 to 10 years or so. This video has mainly been about my opinion and my research into Shell. Obviously you need to do your own research before you decide to invest in Royal Dutch Shell, should I say. But what I'm going to do now is quickly take you into the Trading 212 app, so you can have a little look at the fundamentals for yourself and see if you're of the same opinion of me. Obviously there's a lot of other research to do, and that is why the first 5-10 minutes of this video have been purely about me putting that out there. But there's sometimes the fundamentals don't lie, and you need to have a look at them as well. So that being said, I'll catch you in the app. See you there. Hey again guys, welcome into the app. So if I pop on to over the last year, you can see the absolute bouncing that Royal Dutch Shell has taken over the last, well, 10 months since January essentially, where we were sitting pretty at £23 a share, and now we're down to £9.40, and this week suffered the worst low for a long time at £8.86, which is a very long way for the stock to fall, and some would argue rightly so based on the current situation that the world finds itself in. Having a quick look down the fundamentals then here, we can see that the company still has, even at that significant reduction, a market cap of 79 billion, a PE ratio of 4.12, revenue of 293 billion pound. That is still a huge revenue at this time. An EPS of £2.54. The dividend yield we know is not double digits, it's actually lower than that, more like 3 to 5%. It has a net income after revenue of 15.84 billion. That's obviously a reduction so far from the 344 billion that we saw up at the top there. A profit margin of 4.5%. A low debt to assets ratio of 53%, which is good for the future. It means that it's not getting itself into any significant debt to fulfill its obligations to us investors or to carry on investing. If we swing by the growth metrics, we can see the revenue growth over the last 3 years has been slightly down, but over 5 years it's actually up nearly 14%. EPS over the last 3 years is also down 3%, but up over 5 years 49%. Compound annual growth rate is sitting at 5%, which is pretty good. It's not double digits, but for an established energy / oil company, that's not too bad at all. And then obviously the 3-year dividend growth is just not a thing at the moment. The dividend was actually frozen before they decided to cut it by 66%. It was actually frozen and maintained for the previous 5 years, and there really wasn't much need for the company to grow it, to be fair. I mean, it was sitting at about 6 or 7%, and that is enough for any investor, even an income investor. I'd be perfectly happy with it being frozen like that, as long as eventually after maybe 5 to 10 years they do consider raising it again when they can. So that wraps us up for having a quick look at the company. I just wanted to give you a quick overview so you can see it for yourself, and just what a bargain and just how far it's full. If you're of the same opinion of me, then there's a potential real double your money in dividend income stock to be had here that is at a bargain price in my humble opinion. I'll wrap it up there and I'll see you back out in the real world. Hey again guys, welcome back to the real world. So that was Royal Dutch Shell's fundamentals there, a quick overview on Trading 212. I hope with this video I've at least given you something to think about in terms of investing in Royal Dutch Shell and the energy sector here in the UK. Even if you don't ultimately invest, at least I hope that giving my opinion will help you decide one way or another, and that's what this is all about. I hope you've enjoyed the video, and if that is the case, please don't be shy of hitting the like button. That really massively helps me out. And if you could consider subscribing to the channel if you haven't already, and ticking that notification bell as well, that would be awesome too. And I hope that I will see you in my next investing episode. That would be absolutely fantastic, and I'll catch you there. See you later.